So you've probably felt it, right? All the fear, the panic in the crypto markets lately, everyone's screaming bear market. Well, we've come across this really fascinating analysis that says the exact opposite. It argues the bottom is already in, and the whole thing, believe it or not, comes down to one single critical line on the Bitcoin chart.
And that's really the big question we're digging into today. What is this one line? How could a simple line on a chart have shaped Bitcoin's entire history and maybe even its future? Let's dive in and see.
Okay, first up, a key line for Bitcoin. So the entire bullish case we're looking at today, it's all built on this one long-term trend line. Think of it like a secret guidepost that's been there for Bitcoin's price all along.
So here's the core idea. As long as Bitcoin's price stays above this one line, the outlook is, well, it's bullish. It's that simple. This line has been acting as a major support level, like a safety net, a price floor that has historically stopped the price from crashing. It's basically the line in the sand between a continued bull market and, the scary bear market everyone's been talking about. And look, this isn't just some random line someone drew on a chart. It actually connects some really critical points in Bitcoin's history. See, the whole idea here is a classic trading concept. What was once a ceiling, or resistance, can flip and become the new floor, or support. And the theory is that this exact line, which connected previous market tops, just got tested as the new floor during that recent scary dip, and it held.
Which brings us to part 2, correction, not a bear market. This is the big debate, right? That massive price drop we all just lived through, was that the start of another crypto winter, or was it something else?
Well, the argument we're exploring says no, this wasn't a bear market. What we saw was a really, really deep mid-cycle correction. It was like a perfect storm of bad news that hit all at once and just amplified the selling pressure. But, and this is the key part, it didn't actually break the bigger long-term upward trend.
Okay, section 3, panic, capitulation, and a bottom. Now this is where it gets really interesting because we have to talk about psychology. You've heard the saying, right? The moment of maximum fear is often the moment of maximum opportunity. And this analysis claims we just lived through that exact moment.
This quote just says it all. They have been taken to the point of maximum pain. And man, does that capture the feeling, right? Investors were just pushed to the absolute brink. It was pure panic. People weren't selling because they wanted to. They were selling because the pain, both emotionally and financially, was just too much. And there's a word for this moment of maximum pain in the financial world. It's called capitulation. It's basically when everyone just gives up. They throw in the towel and sell out of pure panic. It's that moment where pretty much everyone who is ever going to sell has finally sold. And historically, that is one of the biggest signs that you've hit the bottom.
And hey, this wasn't just a vibe or a feeling in the market. We have the receipts. There's actual data. Just look at the trading volume on the big spot Bitcoin ETFs. On November 21st, it just skyrocketed. It went through the roof. A huge spike in selling volume like that, well, that's the textbook definition of widespread panic. That's what capitulation looks like in the wild.
All right, next up, the targets, 106K and 125K. So, if we go with this idea that the big trend line held and that the market panic marked the bottom, then the million-dollar question is, what's next? Where could the price actually go from here?
So this analysis actually lays out a two-step roadmap. Step 1 is the next big wall to climb, the resistance zone between about $98,000 and $106,000. I mean, that 100K level is a massive psychological barrier, right? But if Bitcoin can smash through that, then step 2, the next big target, is sitting around $125,000. And that's based on the top of that big price channel we've been talking about, maybe sometime in early 2026.
And look, this whole idea isn't just based on lines on a chart. It's bigger than that. There are some serious real-world macroeconomic forces that could actually push this trend forward. For one, the U.S. Treasury is spending again, which means more money is sloshing around the system. Then you've got potential changes at the Fed that could lead to lower interest rates. And all this time, while some people were panic selling, the strong hands, the long-term believers, they were quietly buying up the dip.
Okay, part 5, Bitcoin versus gold and cycles. To really get what might happen next, we kind of have to throw out some of the old playbooks. This analyst makes a huge point that the game has totally changed, especially when it comes to that classic 4-year cycle that everybody loves to talk about. And this chart just lays out that shift perfectly. You had the old Bitcoin, right? It was this niche thing, mostly for early adopters and retail folks, and its price was driven by that predictable 4-year halving cycle.
But now we have the new Bitcoin. It's a global macro asset. You've got massive institutions with billions of dollars in the game. And with all that big money involved, the old drivers like the halving, they just don't have the same punch. Now it's all about global liquidity, how much money is flowing around the world. Sticking to the old 4-year cycle now, it's like trying to navigate New York City with a map from the 1800s. The landscape has changed.
And this might be the final crucial piece of the puzzle. If you look at a chart of Bitcoin's price, but measured in ounces of gold instead of dollars, you see the exact same story playing out. That chart just bounced hard off its own critical support line. What does that suggest? Well, it suggests Bitcoin is about to seriously outperform gold, and we could be on the verge of a huge rotation of money out of the old safe haven and into the new one.
So it all comes back to this quote, which just wraps up the entire idea perfectly. We have simply witnessed a deep corrective phase within an upward trend. The point isn't to deny that there was pain. Oh boy, there was a lot of pain. The point is that the pain was just a temporary, violent detour on a much larger journey upward. The overall bull trend is still very much alive.
And that leaves us with this one last question to chew on. After all the charts, all the data, all the macro talk, it all boils down to one thing that never, ever changes: human psychology. That timeless dance between fear and greed. So if this analysis is right, and what we just saw was a classic case of peak fear, you have to ask yourself, are the bears wrong again? Is this just another chapter in the book of people selling at the absolute worst possible time? Definitely something to think about.